I'm joined by Geoff Garrett, who's going to talk about lending to the investment banking community. Geoff, there are some complex compensation structures in investment banking, but how do lenders react?
Lenders react well. The key for us is to demonstrate how each banker is paid, because essentially you have four elements to a banker's compensation. The first being basic salary, and in some cases then there are fixed allowances in addition to that basic salary. And then the bonus, which is paid annually, will be broken into two different parts, which one being cash, the other being stock. And the differential between the two will depend on the seniority of the banker. But our job really is to illustrate how each component works and to demonstrate that to the lender.
So taking the incentive elements in turn, cash bonuses are viewed how?
The lenders will take the cash bonuses into account. They'll generally want a history of 2 or 3 years, and then they'll look at the average of that period of time and generally apply a discount to that average, possibly 50% in most cases, because it's non-guaranteed.
And in terms of stock awards, as you say, there's a difference between vested awards and unvested awards.
Yeah, absolutely. The unvested is not really taken into account, whereas the vested stock potentially is. The key really is the delivery of that vested stock. So if you've actually encashed those shares and taken the income, then that will feed through into your annual compensation in terms of earned income that's shown on, say, a P60. That will give the bank a great deal of comfort, and they will take that into account in terms of part of the bonus structure.
Presumably, like any borrower, loan to value and deposit is key to securing the right deal?
Absolutely, yeah. The better the deposit, the better the rate to a degree. Certainly, in most cases, with a 40% deposit, you get the best rates. And the lower the deposit, obviously the rates will go up slightly. But it's not occupation dependent. Bankers get treated in exactly the same way as everybody else in terms of the actual rates that are available in each loan to value banding.
And finally, why would an investment banker use a broker when securing their next mortgage?
Because there are a number of components to their income, and there is a level of complexity. Having someone that's had the experience of dealing with numerous investment bankers over the years is helpful, because they're in a position, we are in a position to illustrate to the bank exactly how each individual's compensation works and make it effectively easy for the bank to understand it, which will generally lead to a smooth and swift outcome for the client, which ultimately is what we're looking for.